What's going on, traders? How we doing out there? Welcome to the one and only Money Mitch. I hope you guys are ready to take a look at the market. We have a great day for you guys. We got a great interview coming on next. Is going to be talking about some ETFs that you guys should take a look at. So stick around to find out exactly what that is, or if you want to, just take a peek in the description below. Let's go ahead and get Money Mitch started.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
Yo, is right, Master of Stonks. Let's go ahead. Let's get right to it. What's going on, Miss Whitehorse? Aaron Sachs in the house. The first three in the chat. Appreciate you guys. So, oh, here we go. There we got it going. We got Peloton being questioned already. Esteban like, yo, I need to know. Stick around. We'll go ahead and touch those stocks. If you stick around, we'll get to some ticker time. I'm going to really quickly run through the market because we do have a great interview coming on at 4:15. So stick around. First things first, if you could do me a favor, smash that thumbs on up. We're going to go ahead and get to an interview coming up with Michael Loukas. And this is the CEO of TrueMark Investments. What is going to be really cool is that we're talking about tech. Right now, what did we get a bounce in? Majorly tech. So let's go ahead. Let's jump right into it. Let's go ahead and take a look at the SPY here. SPY getting a significant rip on up. One of the things that we've been looking at, where we're finally going to get above our green line today, and right at the open, what do? We get above it in that 1 hour. Now we're holding above there. For me, I think we need to hold 443 on pullbacks from here. So you got to be careful to see what happens here. But definitely, guys, check it on out. We got above that 443. Is this the market bottom? That's what everyone wants to know. Is this the complete bottom, or is this just kind of a bull trap? So one of the things that I think is important to do is definitely start paying attention to what I've been pointing to, the market breadth. One of the things that did happen today is we started moving in the right direction. We got essentially towards 73% here. So 73.7% here, getting towards underneath that SMA 200. Now I'm going to point towards the green side, right? 26.3. This had gotten as low as 20%. Now we're going to watch it come back. Where will I really get bullish? When we get above, like, let's say the 40% mark, where at least 60% of stocks are below their SMA 200. Really, I'm looking for the 50% turnaround. But for right now, I'm not overly excited about this move. I do think that you should be making some moves to try to make some profits in moves like this, because this was definitely a day where, just about every stock, you guys can look here. What does that show you? How much green there is here when I roll through the SPY. There's really not much in the red, right? You can get into the red, but even when you get into the red, it wasn't that big into the red. And what was that? That was mainly value being taken off, but a lot of winners there. So what does that show us? That, hey, days like this, these are the days where you need to be able to press that gas pedal, because you can make a lot of money, especially as a day trader on days like today. Hertz says, it's a trap. It's a trap. Is it?
It's a trap. It's a trap.
Says Hertz. We'll definitely go ahead and see if it is a trap out there, but definitely smash the like button. Been eyeing that since your lesson on market breadth. Hey, it's important. One of the things is to watch that, because that's really going to show us. Another thing that happens is how many stocks led us in the rally today. Was it one stock, or was it a lot of stocks? It was actually a lot of stocks. So that's a good positive sign. Keep an eye out for that. Another thing to do is watch the market leader. If the market leader can continue running, guess what, guys? We can't be fighting the trend. And so Apple. That's what I'm going to say here. Keep an eye on Apple. Let's take a look at the Qs. If you look at the Qs, what was up on the day? We got PDD, Netflix, Tesla, Splunk, Baidu, JD showing up there, AMD. You can take a look at Zoom. We'll talk a little bit about Zscaler coming on up, but let's go ahead and take a look here. Auto manufacturing really kind of led there. That was all mainly part of Tesla. Tesla, nice 10% day on there on the Qs there. One thing that to point out on Tesla is we were looking for a push above towards the 900, and we actually got all the way up there towards 930s today. We'll see if this can continue making the run there. All right, so one thing to keep on watch is Apple, right? So the reason I'm watching Apple is because we finally recovered. We started coming on down. I talked about how important when the market was coming down, this is what was happening. Apple was getting hit hard, and it was on nothing but red days for about 6-7 days straight. Then what happens? Earnings comes into play, and earnings start ripping us on up. Now we're above 170. I said a close above 170 would really make me bullish on Apple. Now we look like we could take out the 180s. We take out 180s, and guess what? We're right on back there, baby. We're getting on up there with Apple. So keep your eyes on Apple. I would watch Apple and Tesla. If they can keep coming on up, probably will the market follow. All right, let's keep going. Kayar saying it's a trap. Are you saying we should sell today or wait for another dip, says SG? Personally, I'm not saying either or because I'm not a financial advisor. But what I would be doing is I'm personally not trying to just call the bottom on a whole bunch of stocks right here because you might get a little bit of a chop coming right back down to these levels. So what I think it was really good was if you were able to capture that daily momentum, especially the day traders out there, just capture just even today. If you were able to get 5-7% on a stock today alone, in a market where we've been suffering to get returns or at least suffering to get continuation moves, it's always good to take sometimes what you can get. All right, let's go ahead. Let's keep going. Day trades are the best. You're crazy to short. I tried to short Apple, but they wanted it up. Hey, that's how it is, Pedro. One of the things is try to short stocks that are in a weak trend. It's probably going to be a little bit better than stocks that are in a strong trend. Apple is one of those that when it does crack, yes, it comes down, but you saw it was actually stair-stepping down and elevating back up. So what does that show you on Apple? That you don't want to be fighting the trend and get caught in it. All right, guys, we got to 4:09. We got about 5 or 6 minutes till we get into our interview. I want to keep going here into some of these stocks and pay attention also to oil. Oil is going to be very vital here, guys. It was fighting today. It went sideways, but we closed exactly sideways again on this CVX. That's what I'm going to be looking at, Chevron Corp here, to find out if we can break this on the downside or upside. So we'll see what happens if we can get this to break on the downside. I might be looking to trade oil on the downside. We do have an OPEC meeting later this week, so just pay attention to that. Above the 136, I'd also call long, and you could probably see a continuation, but it's battling right here. We'll see what happens in oil. All right, so strong stocks today. Netflix and Spotify surged more than 10 and 12%, 10 and 12%, as you saw a big move in after an upgrade in Citi. So let's take a look at Netflix here. Netflix pushing on up into the gap zone. The question is, does it fill the gap? If it fills that gap, that's going to be a significant move on up. We'll see if it can get back on up there. It's definitely into the gap zone now. I think it gets on up here at least towards this 480s. We'll see if it can get on up there. That was a prior support that was held for so long. Can it get back into that area? We'll see if it can get in there. Can it get to 500? I'm not so sure, but at least I think maybe we got the 480s into play, and that's 60 points up, guys. So I'd be keeping an eye out on Netflix. Nice little bottoming action here. We'll see if this can keep moving. The Bears took over the crash in 2008. Were you in the market back then? Are you young? Well, I mean, I wasn't in the market in 2008. I will be honest. I wasn't in the market. I was learning a little bit about the markets, but I wasn't in the markets. I was a little younger, so maybe I don't have that experience of 2008. But one thing that I have been watching is, of course, market indicators. We got to watch the sentiment, see how that changes. Right now, I think this is a kind of a bounce to kind of sell. Why? Because I think we're still going to have a little bit of volatility in these first 2 weeks of February. And then we're going to go into what I'm going to call, and I'm going to go out on a limb here like I like to do on Money Mitch. So you guys do me the favor, smash the thumbs on up if you guys appreciate me going on a limb. I'm going to say there's going to be a big reopening trade. Why? Because I've been calling this out a little bit while back. I've been watching to see what's going to happen really about these reopening trades. You know, are we ever going to get that reopening trade? And one thing that I talked about is I thought, you know, January was going to really bring the worst month of COVID infection numbers. And with that being said, I think in February, you're going to actually hear a little bit of relief in those numbers because they're just can't even get to that high. And so when you start hearing release of those numbers, I think that's going to help us rally in these reopening trades. Reopening trades like AAL, I'm watching this off the 16. It kind of clearly cut below that. If we can recover and hold there, now we're up there 1641s. I want to see it hold 1626 on the pullbacks. That was the prior support that you saw it hold very well. We'll see if AAL can keep moving. And maybe for this play, I mean, you can look at Carnival. I kind of like the look here. Why? Because I think, you know, there's going to come a point in time, yes, when Omicron and COVID is going to kind of get over our heads. And then I think that we're really going to see a reopening trade come out. And with this being said, I'm looking for these plays. You know, I think they're going to start moving pretty fast here. So keep your eyes out also on some lodging plays like Hilton. If you see these kind of start ripping, I'd be watching to see if we can get into that reopening trade with, of course, COVID numbers coming down. That's another thing to keep on watch because I just don't think they're going to be able to reach the high numbers that we saw get put out there in January. All right, in about 2 minutes here, guys, we're going to be talking about a couple ETFs. We're going to get into it with Michael Loukas, the principal and CEO of TrueMark Investments. But one thing that I wanted to look into is, of course, you guys know how I like to work backwards, right? I'm a little bit weird. I like to look a little bit backwards instead of forward. So let's talk a little bit about one of these ETFs, and we're going to talk a little bit about the TrueMark AI and Deep Learning ETF. This is LRNZ, if you guys want to follow along with us. But one thing that I like to do is take a look at what's in here, right? So how did it perform today? And at least from what I got here, I could see, of course, big winner today, Roblox pushing off the bottom there. Of course, this is one that I'm watching to see if we can get what I like to call is the undercut and rally trade, where it kind of undercuts those IPO lows, and then you get some traders to really step on up. One thing that we do want to see in the trade is a rising volume into that bottom move. And that's what I'm starting to see. I saw declining. Now we're starting to get a little bit of increase in volume there. Could be some investors taking some deeper shots here in Roblox. I kind of like this trade. So we're going to keep an eye out on this one. We'll see if we can get some bottoming action there. We got some other names like Sentinel One. This is a software name that's interesting. It's right off of the same kind of look, right? The undercut and rally right underneath that low. And now you're seeing what do we want to see? The volume kind of declining and also coming into the move here, right into that. That's where I could see this volume coming in. I think some traders are trying to take that move on up too. So keep these on watch. We'll see what happens. Unity is also a part of this one. I could keep this one on watch. This one's definitely a favorite in software. So we'll keep this one. And of course, the one that got away from me, Twilio, I still remember to the day, and I have this line drawn out here from September 2017 when I used to want to buy this at $26, and let's just say it's not at $26 anymore. So let's go ahead. Let's get into the interview, guys. You guys let me know by giving a big thumbs up in the chat. Let's go ahead. Let's get into some of these stocks and bring on our guests. When we return, we'll go ahead and jump right into the interview.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you know, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, let's go ahead. Let's get into the interview. How we doing? This is Michael Loukas, the principal and CEO of TrueMark Investments. How we doing?
Good, Mitch. Good to meet you.
Welcome to the show. I hope you enjoyed my comment on Twilio because I definitely missed out on that one. I still remember when it first came out, everyone was like, but can't Uber just do this themselves? Well, looks like they couldn't because, I mean, we see where it is nowadays. And when technology leads and there's something disruptive, I mean, it definitely can lead.
Yeah, there's no question about it, Mitch. I mean, it's disruptive technology is what we're all about these days, right? I mean, I think that as you look towards the secular tailwinds, particularly in growth investing, there's a lot to digest out there, and there's a lot to identify. And much like a lot of people missed the boat on FANG 15 years ago, I know they got in 5 years ago, but 15 years ago they missed the boat on FANG. There's a lot out there that could be the next FANG right now, and we need to really drill down on those opportunities and get in them.
Yeah, there's always great opportunities out there. Let's start a little bit more about yourself. How did your journey really lead you to TrueMark Investments?
Well, I've always been I guess, let me date myself now. So, I've been in the business for 26 years, call it, thereabouts. So the reality is, the investment business evolves, right? A lot of it stays the same, a lot of it evolves. And as you see different themes in the investment world, much like we'll talk about in tech or other aspects of the markets, you have to start to recognize where the trends are headed. And for myself and my partners, we've always believed in active investing. We're active investors, active managers, and we believe that the primary marketplace for that active investment, or at least active investing funds, is going to be in the ETF space, right? So where traditionally you'd see a lot of us on the hedge fund or the LP side or the mutual fund side even, I think that we identified a few years ago the thought that the next leg up in the ETF world and the next leg up in their sort of resurgence of active management is going to be in the ETF space. And so we wanted to move in the ETF space. We wanted to stay in asset classes that we thought were inefficient and in entering hyper growth phases, if you will. And that really lends itself to active management and what we do best, in our opinions. So we launched the company a handful of years back. We continue to opportunistically add ETFs that make sense, not only from the perspective of our investment discipline, but also from the perspective of where the tailwinds, what's in demand in the marketplace, both from investors and from an economic standpoint. And we'll continue to do that. But we came together as a handful of folks that have been in the investment business for quite some time, but realized that this is the place we want to be, and this is the place we want to make our investment philosophy available to a broader marketplace.
Well, you already kind of opened up into TrueMark Investments, but let's talk a little bit more about the ETFs and opportunities that are out there. Of course, I mentioned a little bit about LRNZ, but I've even been looking a little bit about kind of your equity income ETF, your DIVZ. If you guys want to check that out, tell us all about these two.
Sure. I mean, those are two of the most popular at the moment, right? So DivZ, I think, is in great demand. Realistically, we believe in concentrated investing. So if you look at either of those portfolios, you're going to see fewer names than you normally would in a pooled fund. So where Learns usually runs about 20 names, maybe about 22 right now. DivZ ranges somewhere between 25 and 35 names in that portfolio. We can talk all day about why we believe in concentrated investing as a risk mitigating tool. But when you look at DivZ and Learns, what you're going to realize, you're going to see names that have growth potential, but different ends of the spectrum, right? So DivZ is really about mature companies that have really healthy cash flow. So when you talk about equity income, what you really want to target companies that have very strong free cash flow, healthy cash flow. They're mature in their business operations, but they still have the capacity for capital appreciation. So if you can get that equity income, you can get that capital appreciation, you can do it in a way that's lower volatility in the market. If you're coming in at sort of a 0.6, 0.7, 0.75 beta, then you've got something very attractive on your hands. And I was watching your segment just before mine, discussing the reopening trades, and where those are headed and where they lie, and where's the real uptick, where's the inflection point for those. But when you're talking about a DivZ, you've got some of these really defensive, mature companies that were producing significant cash flow all the way through the pandemic, and they're starting to see some of those that were selling at discount. There's a bit of a value tilt to this fund, so the opportunities are really robust in that asset class right now for DivZ. You look at stocks ranging from anywhere from like a Union Pacific. We hear daily about supply chain problems. Well, when that supply chain loosens up, when we fix those clogs in that supply chain, a railway like Union Pacific is going to benefit in a huge way. And so they've already got a very mature business with great cash flow, and they were beaten up a bit early on in the lockdown, but there's opportunity there. You range across the spectrum to like an AbbVie, who is obviously a very mature, very successful pharmaceutical company, and they've been discounted or were discounted because their exclusivity on Humira was going to end. But they've got plenty of things in the pipeline to help offset that. So it really becomes, DivZ is a portfolio where you're looking at mature companies that have really strong balance sheets, good management, healthy cash flow. Even if the Fed jumps rates a few times here in the coming 12 to 18 months, we're still in a historically low yield environment. Investors are still looking for that equity income play, particularly in the face of rate rises, because when you raise rates, fixed income is not where you want to be while that's happening. And so investors are still looking for yield. They're still looking for healthy, mature companies. And when you look at DivZ, that's exactly what you get. You get a bit of a value tilt. You get healthy cash flows. You have companies that are well positioned for capital appreciation as well. And I think it checks a lot of boxes for investors in today's environment.
All right, so let's go ahead. Let's get into a little bit more about the environment that we're in right now. Of course, the NASDAQ just had its worst month since March 2020. The earnings of technology stocks really haven't been disappointing, but the price action, I would say, probably hasn't shown those non-disappointing earnings. Now, what do you make about the environment that we're in right now for tech?
Yeah, well, look, that's where we come squarely into the holdings in the Learns fund, right? Our AI investment fund. So the environment from a pricing standpoint, I think you're spot on. Those that are looking for a trade, we're really focused on valuations, right? Really focused on traditional economic metrics like, okay, rates are going up, so growth, is going to get crushed. You know what? I think one of the things we've seen in the marketplace in the last 2 or 3 years, we're slowly but surely decoupling from a lot of historical precedent that we're seeing trades, affected by. So the reality is we think the environment is really strong for some of these companies in the sense that you've got a massive cloud migration happening, right? I mean, the digitalization of the global economy is in the first inning, and it's not going to go backwards. Like, that's just not going to happen. So there becomes a sense of, okay, valuations could be or were extended before this downturn on some of these stocks, but that's how growth stocks work. Valuations get extended. They continue to show really strong earnings. They catch up to those valuations. They extend again. It's a bit like a slinky. So I think we went through a period where there's a combination of macro events and sort of an idea that we were losing sight of the forest through the trees sensation, right? Where we started to say, okay, well, valuations are X and we can't touch this. But the reality is, if you look at the verticals that are happening for a lot of these firms, and you mentioned a few early on between Twilio and Unity and Roblox, it's like you can't have a metaverse, which is a big buzzword these days. You can't have a metaverse without a Unity and a Roblox. Like, how do you build an immersive digital world without Unity and Roblox? There are tailwinds all over the place for these companies. You get into the cyber aspect of it with a Zscaler or a CrowdStrike or an Okta, and you've got just tremendous tailwinds for a lot of these secular growth companies in the tech space. And, when you have a pullback like we saw in the last month or so, and we've been beating the drum on this for a few weeks, seize that entry point. And that way you and I don't sit here talking about missing out on Twilio in 2017 or some of these other names, right? Because they're there. And those secular tailwinds are there, and they're strong, and they're not going away.
I mean, perfect. My next question, windows of opportunity for 2022. And of course, VR, AR, automation, cybersecurity, and metaverse. Of course, one of the ones that I'm focusing on is really the adoption of VR and AR. That's one of the things that was, I think, kind of like a buzzword 2 or 3 years ago that now really is in use, in everyday use. Not just, let's say, gaming, but construction, so many different uses that are being now used on an everyday. Where do you see these windows of opportunity moving in 2022?
Well, I agree with you. I mean, I think you take Unity, for example. We focus so much on their gaming business, that most people, I shouldn't say most, but a lot of people were ignoring the idea that they're penetrating construction, they're penetrating, medicine, the adoption of AR and VR is, I think, going to leap tremendously in 2022, just because of how we live. And I think the reality is with the pandemic, we all got lost in the jet wash with the pandemic, right? Because we're like, wow, are these stocks doing so well just because people are working from home? Well, look, we came out of the pandemic. We're almost out of the pandemic, in my humble opinion. The reality is that, yes, the dynamic of how we work has changed a bit. You're going to have some sort of hybrid mix of people in the office, out of the office, a lot of communication protocols. But let's think about the dynamic of our personal lives, right? And what people do with their time, what their habits are, how they like to shop, the increase in participation in gaming platforms. Like, our personal lives have changed so dramatically in the last 3 or 4 years. Somehow we got it mixed up with the pandemic, where those changes were happening before the pandemic. They just accelerated through the pandemic, and they're accelerating even further in 2022. So I think you just got to look at the core themes in sort of the global way we live, and understand that, again, we're in the first or second inning of a digitalization of our not only work lives but daily lives, personal lives, and that continues. It really continues. So I think, and this is not tomorrow, but I think that in the coming years, you'll start to see a lot of these secular trends and growth produce what we used, the defensive stocks of the coming years, right? Whereas defensive stocks for us used to be sort of the cyclicals, or the companies that could adjust their pricing to compensate for inflation. Like, we're talking about things that are going to be so intertwined and embedded in how we live and work that they're not going away. And if you know anything about tech investing, the idea that it's winner take all still holds true. You've got to look at some of these themes, some of these pockets, and understand that eventually a category killer is going to emerge. And
Definitely.
that tech changes, right?
No, for sure. And one of the things that I'm looking forward to, and I didn't get the Oculus 2 because, there's mention of Facebook coming out with a new headset in the summer, and then it's supposed to have eye tracking. So I'm waiting for that, and I'm sure that's going to bring some hype, and who knows where this could go into in 2022. Now, I'm going to kind of combine my last question here, and I think it's an important thing too, is there such thing as value tech? And for a new investor out there, let's just say you're really just stepping into the market. You're 18 and you want to start looking for investments in tech. What would you say are kind of some things you should be looking for long-term success?
I'm going to go old school here for a second. I'm going to say if you're 18, you likely know more about tech than a lot of people that are in my age bracket, right? At least from the user end of things. And let's be realistic about tech. A lot of these secular tailwinds come with user-facing technologies, and obviously the SaaS is important too on the backside. But the reality is, I would go kind of Peter Lynch here. I would say if you're 18 and you're just starting to dabble in investing in tech, understand what dominates your daily life, what dominates the daily life of your friends. You actually have the best intelligence of anyone regarding where these themes are headed, and what's important to your generation, and where that purchasing power is going to go. I bring up Roblox a lot with that, because people talk about Roblox and sometimes they knock it by saying, well, listen, the vast majority of their user base is a very young demographic. And from my perspective, it's like, that's a pretty big strength, because you have a demographic that's becoming extremely used to Roblox platform and will grow with it. So, if you're 18, yes, just understand what you think the trends are, understand where the trends are headed, and look for names in those categories that can get beaten up artificially, because we just saw a window of opportunity with that, where you think, okay, I mean, there are various macro reasons why these stocks have slumped, but if you understand and believe wholeheartedly in their segment and the secular tailwind behind it, get in, because that opportunity We've seen it before. I've been in this business long enough to see when the FANG stocks were considered overvalued, and 10 or 15 years later, I think what an 18-year-old investor has to realize is that if you look at stock market performance over the past 10 years and you yanked out the FANG stocks, it's not quite as impressive as everyone thinks. Most of that performance came from a concentrated handful of names, and they, as an 18-year-old, probably would have identified the growing popularity, the potential category killers in that space long before some of us that are of a demographic that were just adopting technology versus having been raised in the world of that technology. So I'd say believe in your own information and look for windows of opportunity to get in the space, because even when it looks overvalued, think about 5 or 10 years down the road and you might have a different mindset on that.
Yeah, I could take a quick look into just my own experience of when I was in high school when the iPhone first came out.
Right.
Perfect example right there, right? I mean, we had the moment, the younger generation had it in their hands, and if they only knew how great of an investment that was already in their hands.
Right.
All right, so
buy Apple in 2008 and see what you would have done, right?
Well, don't we all? Definitely is one thing that to learn is definitely that there's going to be some opportunities in the long run in tech. Thank you for joining me here, Michael Loukas, the president and CEO of TrueMark Investment. Definitely, guys, check out those ETFs that we went over, and also in the description below, you guys can go right to the website and check out the other ETFs and opportunities they have to offer for you. So thank you for joining here, Mike, and we'll definitely have you on again.
Beautiful. Thanks for having me, Mitch. Look forward to it.
Thank you. All right, guys, I wanted to get to some questions from the chat. It wasn't that I didn't want to answer your question, Brian. I'm sure Mike can answer your questions. So if you want to reach him out on Twitter or connect to him, I'm sure he'll go ahead and answer that question for you. I'm going to go ahead and start wrapping on up. I'll take one stock from the chat here. I know that you guys love to do some stocks from the chat, so I don't want to get on out of here without at least that. We went a little bit into overtime here, so you know what? I'm going to go ahead and let's take one from here. I think this is a good one to go over. Let's do CrowdStrike. CrowdStrike is a part of the holdings of that ETF that we just went on over here, the LRNTZ. But let's go ahead and take a look here. CrowdStrike coming on back there off the 150. Important level that it recovered today is off the prior support period when it was back here, this 176. I think it needs to just hold that so it can get on back to around 212s. I do like this name in the long run. I mean, at the end of the day, we're going to continue to need cybersecurity and keep pushing into cybersecurity. We all hear about the hacks every day. CrowdStrike, definitely one of those. I still remember where all these lines are. That was in the pandemic. I wanted to buy CrowdStrike, and I missed out on that one. I'm definitely going to keep an eye out on this and see if we can get a move back on up. All right, guys, from you guys in the chat, please do me the favor, smash the like button. I'm going to keep on going here on Money Mitch. But like always, guys, get with me tomorrow on live trading. Yes, we'll be on live trading right here on Benzinga. We do it every single day, guys. So press that thumbs on up. Let me know what you guys thought about today's show. What you guys think about the interview. Do you guys want to have Michael back? Give me a thumbs on up, and I'll see you next time. Like always, if you could do me the favor, hit that subscribe bell if you guys are new to the show. So we'll see you next time. Keep it going, guys. Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.